India's hardware appetite is accelerating. We are seeing a massive deployment of physical infrastructure across the country, from gaming laptops to dense enterprise AI server farms. For an investor, trying to guess which specific brand will dominate this cycle carries significant risk. A manufacturer that leads the market today can easily be displaced by a competitor's next product release. There's a different way to look at this hardware expansion. Instead of betting on individual brands, some investors look at the infrastructure they all rely on to reach the end consumer. They look for the toll booth. In the Indian IT hardware space, that role is occupied by Rashi Peripherals. Rashi operates in the center of the supply chain. They secure bulk inventory from 82 global OEMs, including tech giants like NVIDIA and Lenovo. Then they distribute it to a network of over 10,000 local channel partners across India. This creates a concentrated market structure. For a new competitor to replicate this reach, they would need to build out a physical footprint of nearly 70 warehouses and establish the same credit lines Rashi extends to thousands of local resellers. While the business model is established, a compelling narrative isn't enough to justify an investment. To see if the company is actually capturing this value, we have to examine the recent financial and technical data. The financial scale of the business becomes clear in their most recent earnings report. This table shows Rashi's Q4 FY26 performance. Top-line revenue reached 44.8 billion rupees, representing 51% year-over-year growth. That volume expansion carried through to the bottom line, where net profit increased by over 64% in the same quarter. To understand why profit is growing faster than revenue, we have to look at the two business verticals. Their personal computing and enterprise vertical, which handles high-value AI servers and components, is now the primary growth driver, outpacing the lower-margin lifestyle accessory segment. Historically, this has been a capital-intensive business. Operating as a national distributor requires maintaining high inventory levels, which has led to negative operating cash flows and significant debt in previous years. However, current analyst projections suggest a shift. As the higher-margin enterprise division scales up, the company is expected to cross into positive operating cash flow by fiscal year 2027. Even with this trajectory, the market is pricing Rashi at roughly 14 times trailing earnings. When viewed alongside a 51% quarterly revenue growth rate, a gap exists between the company's valuation and its current performance. The financial data shows a clear inflection point. The next step is tricking the charts to see if market participants are beginning to react to these figures. We can track the recent surge in market interest by closely looking at the stock's technical setup on Trendline. Rashi currently holds a momentum score of 70.2, which places it in a strong technical category relative to the broader market. The stock is trading above all 8 of its simple moving averages, clearing the 50, 100, and 200-day trend lines. This pushed it past previous resistance to a new 52-week high. Additionally, the relative strength index sits at 57.8, indicating strong momentum without being overbought. We also see delivery volume percentages averaging near 50%. This suggests that a significant portion of the buyers are holding the shares for the long term, rather than trading intraday volatility. The price action and volume levels suggest that the market is beginning to reflect the growth seen in the company's financial statements. This investment thesis relies on several independent factors coming together. First, the demand for AI processing and enterprise hardware in India provides a structural growth environment for the entire sector. Second, Rashi's distribution network and 51% quarterly growth suggest the company is positioned to capture a large share of that demand. When the structural advantage of the Indian tech market is combined with the growth in high-end computing components, the recent breakout in the stock price becomes a logical consequence of the data. Investors often focus on consumer brands. However, returns can also be found in the middlemen, who provide the essential links in the technology supply chain. By testing a business model against both fundamental results and market momentum, you can move past the noise and build conviction in your own research.